Hey guys, JD here. How's it going? So I got my glasses on today, so I thought I'd do some chart reading and set up my chart for you guys. So let's go deeper. Hey guys, in this video I actually wanted to just show you guys how I set up my chart. A lot of you have commented that I don't use many indicators, or you're asking why I don't use indicators. But when you see a chart like this that doesn't have any indicators, in price action we just call this a clean chart. This chart will be considered clean because it's not cluttered with a whole bunch of indicators. Reason being is because most indicators, to my knowledge, are lagging indicators. They're called lagging indicators, so they're not current to be making trade decisions with, in my opinion. I know some of them are better than others. You know, it may be telling you when something is oversold or overbought, but I don't need to know that. I just need to watch the prices so it can tell me what's happening. And the main key to that is the EMA. My 21 EMA does all the heavy lifting. Because of the EMA, which you can just get here if you don't know, period 21 moving average EMA. I think it means exponential EMA or something like that. Exponential moving average. I'm not even sure. See how you don't have to know everything to even trade well? Anyway, 21 EMA is really the bread and butter. After that, just two horizontal lines. So this is Apple. So let me show you something. Apple has been running up, right? We know it's running up. I don't need an indicator to tell me that it's been moving up. All I need to do is read the charts. So let's go to the day chart. What has Apple been doing? Look at the EMA. It's been trending up, okay? We had a trend break right here. It broke the EMA. Now what? It's headed up again. So, tip. It's actually kind of a new rule I think I'm putting in place, because I put so much emphasis on this EMA instead of like drawing a trend line through here, because I've been taught to do it different ways. Everybody does it different ways. So I don't know. The EMA has been holding me down. So new rule is this. You got a good trend going, or you done got a couple wins. You always wonder when it's going to be over. Sometimes it's hard to tell. Your best signal is when you get that first close under the EMA, especially if it looks like this, a humongous falling hammer. That tells you some bank done came into the picture, into the game with a whole bunch of money and push price down. It takes a lot of money, especially in the Forex. It takes a ton of money to cause a candle like this, That's how you know the big boys have come to play, and then you go the way they're going. So, didn't mean to go there, but so that's the first clue that, stop going long, and wait. As soon as you get a trend break, a clean one like this, it's time to wait. So what are we waiting for? Well, we're waiting for the rest of the market cycle that we know, which is a trend break, retest to new high, range, reversal most times, unless it's a strong trend like this Apple been in, then it'll break to the upside. So just for tip right there, you get a break like this that closes through your EMA after you've been running up good, that's the end of the run. That's how you know it's the end of the run. That's going to save you a lot of money. That's going to keep you from giving back a lot of your wins by just stopping. I stop right here. Once I get this break, it's close to. Now, one caveat. If the very next candle, which would have been this one, had a shot up, close higher than here, or especially higher than here, trend is continuing. But, like here, see this trend break? I would have been ready to stop, but see, this was actually the beginning of it. So this is actually, now notice, remember, I'm on a day chart and I'm still reading price action. This was a higher low. So we have been coming down. So you know what? This is a great example too. We have been trending down, but I don't know if this had been a trend break. No, this was just a trend down. We have been trending down. So now how do you know when something is about to reverse? Glad you asked. We got a low right here. Tried to push up, couldn't. That normally happens. Tried to push up, couldn't. Came back down. But look, you see this low? And this low? This one is actually higher. Then it shot up hard. So that was clue number one. Okay? But that's not the one I want. These two right here would kind of be off of the bottom. What you want, again, the EMA, 21 EMA. What you want to see is a push through the EMA, then a small pullback, then another candle back up. So actually right here was your higher low. Low, higher low. I couldn't take this because the saddle candle was terrible, but it would have worked. But let's look at it from a better example. Let's say, since these candles were so big, let's say this is the low, right? And then we wait out this whole big push up here. Then we came right back, close under the EMA. Normally you're gonna say, nope, don't do that. The downtrend is gonna continue. But the very next candle broke lower, which is key, because everybody who was watching this, this huge candle, who wanted to go counter trend, or who was still thinking the trend was gonna continue, this downtrend was gonna continue, everybody who saw this candle, said, yep, when we get it closed under the EMA, under the stem, we're gonna put our sell stop entry one tick below this candle to go short. Then powers that be ran those stops, trapped everybody in who had sell stops in right here. Then took off, and those who were already in, who like entered here and had their stop loss here, or stop loss here, or stop loss here, all those people, all those stops got hit. And when they did, it gave fuel to the push, because I was buying, they were selling. Thank you for the sale. Off to the races. And boom. So now we get another low, higher low. Also, look when it's matching. If it's matching bottoms, that's a clear sign that downtrend may be over. Then it did it again here. But then look at the push up. Boom. I enter when it crosses here, or I enter when it crosses here. You actually can't enter when it crosses here at the close, but when you truly know what it's doing, like if this took off like a rocket ship, and I really like to do it when it's 10 seconds left, but yet and still, if it took off like a rocket ship, you can enter here, 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 or here. Any one of them would have worked. 1, 2, 3, win. Okay, so let me get back to what I was actually doing. Oh, I was just reading price action. This is the 4-hour trend. Look at my EMA. We're clearly trending up. We broke out of some area here. Small pullback, like a breakout pullback entry. When this candle passes these highs, you go with it. Boom. I'll take that ride. 1, 2, 3, and it would have been over in this candle. That's the 4-hour. Still reading price action. Every chart, it doesn't matter. If I don't tell you what chart it's on, you don't know what I'm trading right here. Pushed up, range for a while, which is normal. Once we break out of this range, trading is easy. Remember, there's only 3 things that can happen. We can only trend up, range, or trend down. That's it. So what we're looking for is, we're actually looking for the ranges. We're not really focused. We're focused on the trend, on knowing the overall direction. But after you know that, then look for these little trends. Look for these little trends. And every time you get a huge candle that breaks out of them, that means some bank or some government or some hedge fund done came into play, and then we play with them. They ran up. I would have joined in probably here. And 1, 2, 3. Easy win. So let's look at the current chart. I think that was all I wanted to really cover today. I definitely wanted to give that tip about the EMA. You get a close under it. Trend is over. Take a break. Take a walk. And also to know when it's time to reverse. Like showed there. That wasn't a great one, but it worked because I won it. I was watching this. I didn't take this first bar, although it would have won. I waited for a small pullback, which I got here. Look at my signal candle. Beautiful. Right off the EMA. Low. Higher low. Beautiful signal candle. Take that. 1, 2, 3, win. Won a runaway train, but it won. If you missed that one, you could have took this one. This second beautiful signal candle off of the EMA. Boom. 1, 2, 3. So we're watching the ranges. We're watching the EMA, looking for small ranges and then the breakout of them. Look at this small range right here. And broke out. Small range, broke out. That one wouldn't work, but gonna be getting a trade soon. So I missed this run this morning, but just look at these EMA touches. Win, win, win. 1, 2, 3. Look at this EMA touch. 1, 2, 3. This wasn't an EMA touch, but it would have worked because it had a beautiful signal candle up. 1, 2, 3. Then look at small range. Small, very small range. You got some dojis in there, a couple dojis. Whenever you get like a couple dojis and you're just moving sideways and these bars are stacked straight across, that's a small range that happens in a good uptrend. All you do is wait for either a counter trend fail breakout to come give you an entry off the EMA, or wait for a huge candle to break out. See how much bigger this candle is than the rest? That means some big institution or Bank of America came in and pushed prices up. Push prices up. You get in right here. 1, 2. Wait a minute. 1, 2, 3. That's a win. It's a win. And then you wait for the next EMA touch, which happens right here. We pushed up. Now this one, because I knew that this was the top, I'd be a little worried about. But let's see if it worked, just because it's a great signal candle off the EMA. 1, 2, 3. I mean, I'm not making this stuff up. Just follow the trends. Take your EMA touches. Okay. Now, and that's that. Now the next thing is these ranges. So remember to zoom out sometimes on your mouse. When you zoom out, you can see the picture better. You know, this looked like just a complete downtrend, but it's still actually part of an uptrend. And this could just possibly be a pullback. Now it's a big one. If I was to count legs, I would say that's one leg right there, another leg right there, boom. So I would have thought we would have stopped it right here. That's why I thought we was good here. Small little range. If we had the breakout candle, I would have been going. But you use the horizontal lines just to, let me go to something I'm not trading because I don't want to mess with those lines. See, when I go to a new chart, I zoom out so I can see what's going on. See how much better I can see what's going on. Missed this nice strong trend up. Look at this close. As soon as you got that close right here, trend was over. Don't do it. You're going to get trapped in here. After you get the, I mean, you want EMA touches, but the good trends, you'll get the EMA touch, but it can't get through it. Look, it couldn't get through it. 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 No closes. There were no closes on the other side of my EMA. You have to stick. You got to watch out for that. And then when you did get the close, that was the end of the road. You know, you take this one, you still win 1, 2, 3. But that's the last one. You take this one, you lose. You take this one, you lose. You take this one, you lose. Stay out of this. But look at the EMA. It's straight across. So what do we have? A range. That's why I don't need any other indicators. I know I'm trending up. I know we're moving sideways. I know we're moving down. The only three things the market can do. The EMA gives you a clue on the only three things that the market can do. So now what I could do here is, because I got this down, up market. Now let's box it up. It's a range. It's a bigger range. Oops. So you just box that up. And okay, that's it. So this is it. You got the EMA already working. We know that up here was the highest high. I'm going for the highest high because I want the real breakout. And I'm going to take the swing off of that high. The swing means we made a high here, and the next low from that, boom, that was a swing down here to this low. I'm boxed up, just like that. I'm boxed up. Wait until you see these touches, and then it don't break out. That'll amaze you. And then you'll start to see like, oh, I mean, I can't tell you why the market does that. It's just what it does. But yeah, the more touches that you be like, oh, I got my range exactly right. When that happens, then when you finally get this breakout, as you guys be seeing me get that breakout pullback entry, that's why I take them so much with confidence, because I've watched prices be stuck inside of a range for a considerable amount of time, and eventually it has to break out, because it can only go long range or go short, and it does range like 70% of the time. That's why so many ranges around. But that 30%, when it's rallying, I mean, there's a ton of trades there, and I don't need 3 there, but there's a ton of trades once a real good trend starts. And so patience is the game. Go through some charts, zoom out, get a good look at the chart, box up a range, a big one, and wait for a breakout. Now, the question is, which way is it gonna break out? That all depends on which way it trended down into this. Like this one trended down. This is a clear trend break, retest to a new low, right? So then we even came even lower than that at one point. Then we came up, touch, couldn't get out, came down, touch, couldn't get out, headed back up. I will be looking for this, because we traded down into this after a trend break, retest to new lows, right? Range. I'm looking for the reversal, so I'm expecting this to break out higher. So when it actually does that, I just go with it. You see how I mean, so I'm looking for a breakout pullback to the upside, and it may take a couple hours to happen, but that's why I win it when it does happen, because that was the trade I was actually waiting for. So I'm sitting here waiting for trades. You know, I'm not just trying to make a trade happen because I lost and I want to get back real quick. No, I'm waiting for what the next opportunity probably, that was not a word. I'm waiting to see what the next opportunity should be. And in this case, it's a breakout to the upside. Now, if you're in a nice strong trend like Apple, and you can go through all the day charts and stuff and see that, man, we've been in a crazy trend up and it should continue, then you're just expecting this. I mean, I boxed this up, but it really didn't hold at all. You're just looking for strong pullbacks and then retest. So eventually I expect prices to retest and try to test these highs. So I'll get at least one trade on the way up, and then hopefully my breakout trade right here on the way out. So that is what I have today. Just, you do not need a lot of indicators to trade. And I think I'm gonna end on this. Let's say, you know, the source of all training material for trading comes from the same source. Let's say that all indicators that we can find on all these different brokers come from the same source. Now let's think about the fact that 90% of people who are trading have in some way, shape, or form touched the same trainings using the same indicators, and 90% of the market is losing. Could that be because they're all using the same information from the same source, and that source designed it that way? Just a thought. So I don't use indicators. That's just a thought for today. So that's all I got for you today. I hope this video was cool. Hope you learned something. And so until the next time, as always, I wish you increase on the Sutton. Like, subscribe, and if you need to check out Pocket Options, I got a link in the description for you. Catch you guys next time. Bye-bye.